The looming retirement crisis has the potential to place nearly half of the American population on the precipice of financial devastation, as indicated by a recent survey. In this video, we will delve into key statistics and insights concerning the state of retirement in the United States. The idyllic notion of a tranquil and worry-free retirement is being shattered for many households, confronted by the stark reality that they lack the preparedness to meet their basic needs once their working days are behind them. A distressing number of individuals in their 60s and 70s currently grapple with financial uncertainty, and unfortunately, this issue is escalating over time. Please make sure to subscribe to The Financial Scoop and leave a like below the video. Well, statistics furnished by the National Council on Aging disclose a disconcerting trend. Between 2016 and 2023, a staggering 90% of American households with older members experienced declines in income and the overall value of their assets. This has propelled them into an unsettling future, burdened by the daunting prospect of struggling to make financial ends meet during what should be their golden years. Other contributing factors, including stagnant wages, the rise in living costs, and a lack of financial literacy, have collectively hindered Americans from amassing adequate savings for their future over the course of several decades. At present, the United States boasts a population of over 55 million individuals aged 65 and above. Projections indicate this figure could surge to 73 million by the year 2030. However, a study conducted by the National Institute on Aging and Social Security Administration paints a grim picture. An estimated 37 million older households could find themselves either below the poverty line or at risk of falling into poverty by the close of the decade. This translates to a staggering 50.5% of the entire retiree population, a truly alarming proportion. Nevertheless, this group won't be the sole casualty of this crisis. A recent survey conducted by Third Way reveals that 36% of adults feel inadequately prepared for retirement in comparison to their parents. Presently, a mere 47% of American workers have access to a retirement plan through their employment. While certain safety nets such as Social Security and Medicare are available to some retirees, these options are insufficient to guarantee a comfortable retirement, and there's uncertainty about their adequacy until 2030. In fact, the current generation stands as the first cohort in which more than half of the population lacks a pension to partially cover retirement expenses. This signifies a paradigm shift where the majority of Americans must rely on their personal saving endeavors to secure their retirement years. Presently, 1 out of every 3 seniors finds themselves grappling with a retirement crisis, either devoid of savings or facing the imminent depletion of their funds. Concurrently, 51% of individuals aged 45 to 75 confess to lacking the necessary retirement savings to sustain them throughout their lifetime, and a notable 32% express a lack of confidence in their ability to cover essential monthly expenses during retirement. The act of saving for retirement has posed a formidable challenge for baby boomers, Generation X, and millennials alike. Economic recessions, stock market downturns, and housing market fluctuations over the past decades have eroded the power of retirement funds. Consequently, even those who have diligently contributed to their retirement accounts are discovering that their nest egg falls far short of what is required to maintain their standard of living post-retirement. The surge in housing costs, automobile loans, healthcare expenditures, and day-to-day essentials stands as the primary drivers. While inflation metrics are exhibiting a decline, the cost of numerous goods and services remains notably high, significantly impacting Americans. A striking 69% of workers find themselves living paycheck to paycheck due to these factors. A substantial majority, comprising 57% of consumers, are ill-equipped to handle an unexpected expense of $1,000, according to Bankrate's annual emergency fund report. Traditional retirement savings and income avenues are experiencing strain or becoming inaccessible, leading to heightened anxiety. This predicament is further compounded by inflation and unanticipated costs, intensifying the difficulty of saving for retirement. The landscape is further complicated when considering caregiving responsibilities, rising healthcare expenses, and the potential need for long-term care. As of June 2023, 23% of Americans carry medical debt, with 35% of those being aged 65 or older. Within this group, a staggering 82% are grappling with the challenge of paying down this debt. Given these circumstances, it's no surprise that a significant 50% of all Americans have not managed to amass any savings for retirement. For those who have managed to establish a form of financial cushion, the average balance in their retirement accounts is a mere $54,000, an amount that would hardly suffice for a single year. Official data from the Bureau of Labor Statistics, BLS, paints an even graver picture. To retire today, these savers would need to address over $1,000 in debt. Housing expenses alone amount to $18,872 per year, encompassing rent or mortgage payments. Transportation costs, including vehicle ownership, maintenance, and insurance, constitute an annual outlay of $7,160. Healthcare expenditures for those aged 65 and above account for around $7,030 annually, spanning insurance, medical services, drugs, and supplies. Furthermore, retirees allocate approximately $6,490 annually for food, constituting 12% of their outgoings. These financial pressures are acutely felt by those on fixed incomes. Consequently, if one plans to retire at 65 and anticipates a lifespan of 15 to 25 more years, amassing over $1 million in savings becomes imperative to sustain a retirement lifestyle. It comes as no surprise that a substantial number of retirees are returning to the workforce, compelled by the escalating cost of living. The latest data from the Bureau of Labor Statistics reveals that 41% of older Americans who retired between 2020 and 2022 have re-entered the job market this year. For others, a profound alteration in their way of life has become necessary simply to make ends meet. Consider the experience of Audra and Ron Edgington, a couple from Texas. When they retired in August 2021, they could not have anticipated the ensuing economic turmoil. Although Audra had managed to save modestly from her career as a freelance photographer, their reliance was placed on Ron's substantial military pension. This benefit, amounting to $79,318 annually after taxes, provided them a monthly sum of $6,609. However, their financial breakdown illustrates the tightrope they now tread. $2,041 for housing costs, including $1,911 on the mortgage and $130 for home insurance. $909 for their car, covering loan payments, insurance, and fuel. $750 for food, and $703.92 for health care. The inflation surge post-retirement came as a shock, necessitating a much more rigorous budget. Formerly, every day was akin to Christmas, characterized by frequent spending and Amazon packages at their doorstep. Now, living within their means has become imperative. Regrettably, the Edgington story isn't unique. Rather than basking in the tranquility of retirement, a significant number of American households are grappling with escalating distress and financial instability. While downsizing homes or relocating to more affordable communities can be strategic choices for some families, these options might soon become necessities. A recent study by Boston College Center for Retirement Research paints a disconcerting picture. An alarming 50% of working-age households will be incapable of maintaining their current standard of living in retirement. These sobering findings assume a scenario of robust working and saving, factoring in Social Security income, and working until age 65. Inequities within the retirement system have cast a shadow over younger workers' prospects for economic security in their later years. Pew Research data exposes a stark contrast in the growth of retirement wealth between top earners and lower-income workers over the past 3 decades. While the retirement account values held by the top 10% of earners skyrocketed by over 400%, the bottom 90% experienced a mere 30% increase. This growing disparity in retirement wealth bodes ill for Generation Z, Millennials, and Generation X, as wealth inequality among these generations is swiftly mirroring what baby boomers currently face during retirement, albeit at a much earlier stage. The top 10% of millennial households already hold a whopping 55% of their generation's total wealth, foreshadowing a difficult path ahead for low and middle-class Americans. The top 10% of millennial households already hold a whopping 55% of their generation's total wealth, foreshadowing a difficult path ahead for low and middle-class Americans. In many ways, it feels as though U.S. workers are embarking on a slow march toward potential poverty, with even their most dedicated efforts offering no guarantee of financial stability in their twilight years. Older Americans are often left with no choice but to liquidate valuable assets or forego essentials like food and medications to make their retirement stretch. Simultaneously, younger generations face their own challenges, wrestling with mounting student loan and credit card debts, and finding it increasingly difficult to establish wealth via home equity due to skyrocketing mortgage rates and exorbitant home prices. Amidst these trials, the ability to put money aside for the future becomes a daunting challenge.